Let me start with this. Index universal life is not for everyone. In fact, for many people, it's the wrong strategy. But for the right individual, structured correctly, it can become one of the most powerful long-term wealth planning tools available. My name is Jennifer Ramos, Managing Partner and Financial Strategist at Arcadian Wealth Management. And today, I want to explain what an IUL is actually designed to do and who it truly makes sense for. We work with many business owners and high-income professionals. They've maxed out their 401k, they're phased out of direct Roth IRA contributions, they're in high tax brackets, and they're concerned about future tax increases, retirement income flexibility, estate efficiency, market volatility, legacy planning. They don't need another savings account, they need tax architecture. And that's where the conversation around index universal life begins. Before we talk about what it is, let's clarify what it is not. An IUL is not a short-term investment, a replacement for your 401k, a get-rich strategy, a high-return speculation vehicle. If someone is looking for fast growth or quick access to capital without structure, this is not the solution. IUL requires long-term commitment, proper funding design, disciplined premium structure, professional oversight. When structured improperly, it can underperform expectations. When structured correctly, it becomes strategic. What an IUL actually does at its core, an index universal life policy is a permanent life insurance contract with cash value accumulation tied to market indexes, but it is not directly invested in the market. It typically includes downside protection, no direct market loss, upside participation caps, tax-deferred growth, tax advantage access through policy loans, a permanent death benefit. The key feature for high-income earners is tax flexibility. Because unlike qualified plans, there are no contribution income limits, there are no required minimum distributions, there are no early withdrawal penalties when structured properly. Income can be accessed tax-free through policy loans. This creates an alternative tax bucket, and tax diversification matters. For certain individuals, an IUL can function as a supplemental retirement income layer, not as the sole plan, but as a flexible tax-free bucket. Imagine entering retirement with taxable investments, tax-deferred accounts, and a tax-free income source. That flexibility allows you to manage tax brackets, Medicare premiums, Social Security taxation, RMD exposure. You can decide which bucket to pull from in any given year. That control can significantly impact lifetime tax exposure. It is not about replacing a Roth. It's about expanding your options, especially for those phased out of Roth eligibility. Many high-income professionals exceed Roth IRA income limits. They feel restricted, and IUL does not have those income limitations. When structured properly and funded efficiently, it can serve as a Roth-style alternative, but with added flexibility. However, it must be designed correctly. Overfunded within IRS guidelines, low internal cost, long-term horizon. This is where ethical design matters, because poorly structured policies create disappointment. Properly structured policies create leverage. For business owners and high earners, we also sometimes integrate IUL into mortgage retirement planning, not to eliminate debt recklessly, but to create structured liquidity. Instead of aggressively prepaying a low-interest mortgage, some individuals allocate excess cash flow into a properly designed IUL. Over time, that policy builds tax advantage liquidity, flexible access to capital, legacy protection. In later years, that liquidity can be used strategically, including mortgage payoff timing if desired. But the real power isn't just the mortgage conversation. it's the control. Now let's discuss estate planning. An IUL includes a death benefit. That benefit passes income tax-free to beneficiaries. For high net worth individuals, this can provide liquidity for heirs, offset estate taxes in certain cases, equalize inheritance among children, protect business continuity. It is one of the few tools that simultaneously builds living benefits and legacy protection. That dual function is powerful, especially for business owners thinking generationally. Let's be very clear. IUL makes sense for individuals who have strong, consistent cash flow, have already maximized qualified plans, are in higher tax brackets, are planning 10 to 20 plus years out, want tax flexibility in retirement, care about estate efficiency. It does not make sense for someone struggling with liquidity. It does not make sense for short-term investors. It does not make sense for someone who cannot commit to disciplined funding. Selectivity matters, and that's where ethical planning begins. With a 45-year-old business owner earning high six figures, he had maxed out retirement accounts, significant taxable investments, a growing business, long-term legacy goals. He was over Roth income limits, concerned about future tax increases. After designing a properly structured IUL strategy funded within IRS guidelines, he gained a future tax-free income source, a death benefit protecting his family, liquidity outside market volatility, long-term tax diversification. This was not his primary retirement vehicle. It was his flexibility layer, and flexibility creates power in retirement. Index universal life is not magic. It is not a shortcut, but for the right person, it creates tax flexibility, income control, estate efficiency, downside protection, multi-generational planning leverage. The mistake is not understanding who it's for. And it's certainly not for everyone. But for disciplined, high-income individuals planning decades ahead, it can become transformative. If you're a business owner or high-income professional and you've already maximized traditional retirement vehicles, it may be time to explore whether a tax-flexible strategy belongs in your plan. At Arcadian Wealth Management, we offer a tax diversification strategy review. In that session, we evaluate your income level, your tax bracket trajectory, your current retirement structure, your estate objectives, and whether an IUL is appropriate or not. Because our responsibility is not to sell a product, it's to design strategy. Retirement isn't just about building wealth, it's about structuring it intelligently. If you'd like to determine whether this strategy aligns with your goals, click the link in the description or click the button below. Answer a couple quick questions and you'll have the opportunity to schedule a conversation with our team. I'm Jennifer Ramos, Managing Partner at Arcadian Wealth Management. I'll see you in the next video.